This is the place for boomers. Boomer Being. With your host, Leslie Neumer.
Welcome. I'm Leslie Neumer with 95.9 WATD FM. Today we'll be talking about financial planning during uncertain times. My expert guest is Bill Harris, certified financial planning practitioner and owner of WH Cornerstone of Duxbury. Welcome back, Bill.
Hey, thanks for having me. Great to be here.
We love having you. So last year you were in and we spoke about the war in Ukraine. It had just begun. We talked about inflation, which had become a huge issue at the grocery store. Unfortunately, neither of these issues has gone away. How do you advise your clients to keep calm and carry on with all this uncertainty?
Well, Leslie, let me tell you a fun story. The other day I was at, I won't say the name of the store, but my wife had sent me in to buy tissues and they were starting to stock the shelves. And I noticed the tissue sizes were getting smaller. So I loaded up. I bought like 10 boxes of tissues. And I came home, my wife's like, "What are you doing?" And I told her why. So that's how I battle inflation. So you got to take advantage of opportunities when you see them. So again, I think you just got to pay attention to what's going on and look for opportunities and be mindful with what you're doing. These times like this, it's a great opportunity to kind of take stock on, what your budget is, what your balance sheet is, where your assets are being held. And I think a lot of people are on autopilot. They don't pay attention to it. But when we get a shock like this, people start paying attention to it. So I think there's going to be some good that comes from this type of economic situation.
I agree. I also have noticed how the packages are getting smaller for many items. So what are some solid investment principles for uncertain times?
Well, I know the last time we talked, I talked about I bonds, and I still want to talk about that. Again, you can't get I bonds from your broker. You have to go directly to treasurydirect.gov. It's a government website. I would tell people to get familiar with that site. There's other investing goodies that are there. And you can't go buy an I bond and sell it to your friend. Like, it's going to be in your name and held by you. But again, they're paying well over 6%. And they reset that rate every 6 months. So I think that's the first place to look. I think we've seen a lot of banks and institutions offering next to nothing on savings and money market accounts over the last few years, but those things are starting to rise. So pay attention to it. It might cause you to do a little shopping. Your bank may not be paying high enough rates and the bank down the street might be. So you might want to start to pay attention to that. Those are the safe things. And I think, if you want to start getting into investments, stocks are going to be a great place to be. Stocks over the long haul will outperform inflation. They have historically. I expect them to continue to do so. And one of the reasons why that is a company can raise their prices. And so that's usually how they, stay above the inflation fray. Weird things can happen in an inflationary environment. Earnings can start to rise for companies. If, I just mentioned how I just bought 10 boxes of Kleenex. So a lot of people will do this. They'll go to the store to buy a chicken and they'll say, you know what, I'm going to buy 2 of them because they're going to be more expensive next week. So you can start to see earnings for companies accelerating over time. So that's another great place for people to be, but they got to be comfortable with investing in the markets. And then, people like commodities, gold and things like that always hold their value well during inflationary times. Leslie, I think for you need to go out and buy some diamonds and hold on to them.
That sounds good to me. Any other tips, Bill? Like, what about CDs for those who are cautious? Are they an option these days?
Well, I would be cautious on going long-term on CDs because interest rates are rising. Think about it. If you bought a CD today that's paying 4% and then tomorrow interest rates go up to 5%, well, you're not really earning as much interest as you could be. So what we always tell people to do is ladder their CDs. So you might have a 3-month CD, a 6-month CD, a 9-month CD, a 12-month CD. And then when that 3-month kind of matures, you're kind of rolling it back out. So you're always kind of laddering them over different time periods. We like to think we know where interest rates are going to be, but we don't. No one really knows where they're going to be. And that's why a laddering strategy is very important to do. So again, I don't think it's a bad place, but I wouldn't be locking in, way out in the future with all my assets. But I think having a little out there might be fine. And then again, using that concept of laddering would be the way to do it.
Excellent. Well, thank you, Bill, once again for sharing your expertise with us.
Well, thanks for having me on. I really appreciate being here.
Wonderful. And listeners, you can learn more by reaching out to Bill at whcornerstone.com. And thanks very much for joining us today on the Boomer Being Show.
Happy to be here.
This has been Boomer Being on WATD.